What is going on, my friends? Ryan Williams here, back with another one, and today we are going to be honing in on one particular dividend stock that has seen a pretty substantial drop in share price lately and offers investors a pretty significant dividend growth opportunity. This dividend stock has a super high 5-year CAGR of about 20%, a sweet dividend growth history of 8 consecutive years. And with the recent downturn in the market, the stock has yet to recover, potentially making it a good time to pick up a few shares for your dividend stock portfolio. Anyway, before you get rocking and rolling, if you guys are like me at all and have dividend stocks on your Christmas list this year, go ahead and give this video a big thumbs up. And if you enjoy learning more about dividend stocks, then I'd ask you to consider subscribing to my channel as well. Most of the videos I share with you guys here on this channel are analyses on various dividend stocks that I come across, as well as inside looks into my own dividend stock portfolio. So if that's something you'd be interested in seeing, go ahead and hit that subscribe button. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, my friends, time for the big reveal. So the stock we are going to be talking about today is Best Buy, ticker symbol BBY. And it's been some time since I've talked about Best Buy. And since the last time I talked about Best Buy, guys, it has gone up in share price quite a bit, as you can see right over here. And then it has really plummeted. So as far as share price performance goes, in the last year, Best Buy is down 3.3%. In the last 6 months, it's down 12.19%. And then just in the last 30 days, guys, it has dropped 16.08%. Now, furthermore, in the last 5 days, guys, it's down another 9.5%. So Best Buy lately just cannot catch a break. It is really coming down in share price, which is great for us dividend investors who are looking for a bargain. And I think Best Buy is kind of looking like one of those right now. So with this stock, I mean, with these big drops that happen like this, it kind of begs the question, what went wrong? Like, what caused this company to just plummet in share price? And to get that conversation started, guys, let's jump over to this article right here. Headline reading, Black Friday sales growth reverses for first time. And scrolling down, guys, I just want to focus on actually this one bullet point right here, which will give us a little bit of insight as to how this is relevant for Best Buy, which is obviously in the retail space. So this bullet point reads, retail consulting firm Sensormatic Solutions found that visits to brick and mortar stores cratered 90.4% from 2019 levels on Thanksgiving Day, with retailers including Best Buy, Dick's Sporting Goods, Kohl's, Macy's, Target, and Walmart deciding to keep their doors closed this year. Meanwhile, traffic at retail stores on Black Friday dropped 28.3% compared to 2019 levels, though consumers may spend more online with flashy e-commerce sales coming on Cyber Monday. So that's one thing that's not really working in the favor of Best Buy. And I want to jump over now to this article, which quotes Best Buy's CEO, Corey Berry, who basically is blaming organized crime on some of the misfortune that this company is having. So looking at this first bullet point, guys, Best Buy CEO Corey Berry said Tuesday that electronics retailer is working hard to try to stem a rise in loosely organized bands of thieves who have targeted the firm's retail locations. So, I mean, this is a big issue. I don't know if you guys have read any of the stuff that's going on, and we won't really get too into it. But with that said, some good news coming out of this recent earnings. Best Buy reported Q3 results that beat expectations on both the top and bottom lines. However, despite this, shares dropped about 16% in Tuesday's intraday trading on concerns over slowing sales growth and squeezed margins. And then jumping into this next bullet point, which kind of talks about these margins. So in the conference call with investors that followed the earnings release, Berry pointed to organized crime as one of the factors that impacted margins. She also noted higher promotional activity and costs related to its new Totaltech membership program, which is actually something new that Best Buy rolled out. And we'll talk a little bit about what this is. So jumping over actually to Best Buy's website, Totaltech, this paragraph right here, gives you peace of mind in one comprehensive plan, around-the-clock tech support, up to 24 months of product protection on most Best Buy purchases with an active membership, free delivery and standard installation, plus other great benefits. It's the plan you need to protect the tech you love. And if we scroll down a little bit on this page, it'll bullet point some of the perks to being a Totaltech member. And just to reiterate what those include, it's free delivery and then installation. Like if you buy a TV, not only will they deliver it for free, but they'll also install it for you if you like need it mounted on your wall or something like that. This will also come in handy if you buy like routers or something from Best Buy, which can be sometimes difficult for people to set up. They also pulled into Amazon and offered free 2-day shipping. And then also pretty cool, everyday savings on repairs, advanced services, and more. Oh, also last right here, access to exclusive Totaltech member prices. So there's some good things coming out of this, and it actually is going to cost about $200 a year. And just to share with you guys a little bit about how the company thinks about this new Totaltech program and how it's going to work, we're actually going to take a brief moment and listen to an audio clip from the recent earnings presentation where Best Buy CEO Corey Barry talks about Totaltech and what it's going to involve, and how the company as well as members can benefit from this type of service, from this type of subscription. And then after that, we'll continue on with our talk about Best Buy. So take a listen to that real quick.
Let me provide a tangible example of how the offer can come to life. A Totaltech member purchases a 65-inch TV and gets a $150 member discount. She gets the TV delivered and mounted on the wall in her living room. The next month, she buys a new iPhone for her daughter. As long as she keeps up her membership, she gets 2 years of product protection on the TV she bought and 2 years of Apple Care Plus protection for the phone. A few weeks later, she can't get her laptop to connect to her printer, so she hops on a dedicated chat line with Geek Squad, who fixes the problem by remoting into her computer so she can get on with a productive day of working from home. As a member, she received all those benefits for $199 per year. As you can see, not only do members receive significant savings, they can also be confident that whatever their technology needs are, we will be there to help. The goal is to create an experience that makes it inconceivable for members to purchase their tech from anyone else, driving a larger share of consumer electronics spend to Best Buy. We successfully rolled out the program nationally and online and converted more than 3 million former tech support members. It is very early, as we just launched last month, but so far, we continue to see behaviors that we intend to drive and that we saw in the pilot, including more frequent interaction and higher incremental spend than non-members.
All right, guys, so hopefully that clip helped elaborate a little bit more on this Totaltech thing. It's a brand new thing for Best Buy, but it could be a good source of revenue coming in for this company. We'll have to see what happens. And now, guys, let's move on and scroll down and take a look and see what some of the Seeking Alpha bulls have to say about Best Buy. So Best Buy's low teens PE valuation are attractive, and I think that the future success of its Totaltech membership program can act as a re-rating catalyst, okay? So they have some good feelings about Totaltech as well right here. Moving on to the second one, Best Buy is priced for zero growth despite a history of execution. With the addition of a subscription program, which is the Totaltech, and a dive into the home healthcare market, the company is undervalued today. Moving on to the third point here, despite short-term headwinds, this retail apocalypse winner's high-touch customer service and expansive store network position it for continued success. Okay, that's pretty good to hear. And now with that said, guys, let's jump up and take a look at the valuation of Best Buy real quick and see how it's sitting. So Seeking Alpha gives it a C+, which is about average. It's a passing grade, but it's it's not top of the class or anything like that. It's not like I was when I was in school, guys. I'll tell you guys what, I was a pretty dang good student in my day. In fact, while we're on this subject, I was also the all-school hide-and-seek champion. That's right, I was the best hide-and-seek player at my elementary school. In fact, I do believe Corey Clark is still looking for me. But anyway, guys, back to Best Buy. So the forward PE ratio of Best Buy is actually looking pretty good, almost in the single digits, currently sitting at 10.32, which is 26% lower than this company's 5-year average PE ratio. So it's coming down there in PE ratio. Scrolling down, their price to book could be a lot better, I will admit. 6.14 for the forward price to book. I would love to see this about half. Like if it was half the price to book or even lower than that, I'd be pretty stoked. But 6.14 is a little bit high. And in fact, this is 10% higher or 9% higher, than the company's 5-year average price to book. So it is getting a little bit more expensive in this regard. And then the price to cash flow is actually looking to be in a pretty great spot. 8.82 in the single digits, which is right where we want it. So overall, I guess that's why they have a C+ valuation. All right, guys, now jumping over to the financials page real quick, let's take a look at the income statement and see how revenue is doing for Best Buy. So overall, it's trickling up pretty good. Okay, $42.2 billion in 2018, $42.9 billion in 2019, $43.6 billion in 2020, and then in 2021, $47.38 billion. But then in the trailing 12 months, $52.3 billion. That's pretty nice. Actually, I should look right here. Yeah, $52.3 billion in total revenue in 2021, or in the trailing 12 months, excuse me. And then jumping over to the balance sheet right here, guys, let's take a look. both at the cash on hand, which right over here in the last report is about $3.5 billion. And then scrolling down, let's take a look at the shares outstanding as well as the total debt. So shares outstanding for Best Buy are decreasing over time. That's great. They are consistently buying back shares as the years go on. In fact, from January to now, it looks like they've bought back even more shares. So I'm glad to see this going down. That's giving more equity to us as shareholders, which is great. But you know what? The total debt for Best Buy is really jumping up. So from 2019 to 2020, it really skyrocketed, went from 1.4 billion to 4.1 billion. But it does look like from their last report, they have started to pay down that debt a little bit. But even with that said, guys, it's really not, like, it's definitely a big jump compared to where they were sitting, which is in like the $1.3 billion range. But 3.9 billion is not too crazy, especially considering they currently have 3.5 billion of cash on hand. So it's like right in line with that debt. So I'm really not that concerned about this debt. They could pay the majority of it off like ASAP if they wanted to. And put themselves in a really good position. So this is still pretty manageable as far as I'm concerned. And then scrolling up, guys, looking at the cash flow, let's take a look at the levered free cash flow and see how that's looking. Okay, from 2018 to now, okay, it went up, especially 2020 to 2021, it jumped up. Basically, well, it actually did more than double the levered free cash flow in that time period. But in the trailing 12 months, it has taken a hit in free cash flow. Now let's scroll up real quick, guys, and take a look at the dividends for Best Buy. Okay, so for dividend yield of 2.69%, okay, average dividend yield, nothing super crazy, nothing to write home about. They have a payout ratio that is actually really low, 27.82%, which is good. They have enough to pay the dividend and grow the dividend substantially more if they want to. They have a really high 5-year growth rate, guys, 5-year CAGR of almost 20%. 19.89%. And I'll tell you what, just me personally, I could use a few more stocks in my portfolio with a high 5-year CAGR like this. I have some high yielders currently like Altria Group or EPD or AT&T, but I'm kind of lacking in the dividend growth department, guys. And then moving on to the dividend growth history, guys, they have 8 consecutive years of dividend growth, which is really not too shabby. But scrolling up, looking at this dividend history, it looks like they have 17 years of consecutive payments. But let's zoom out and take a look at this slope. It's going to be really high. Yeah, this is what we like to see, guys. I could really use some of this in my portfolio. I don't know if Best Buy is going to be the one I'll add, but I'm looking at a couple others that have similar 5-year growth rates, but man, Best Buy is looking pretty good right now. It's looking pretty good if I do say so myself. All right, my friends, now that concludes our conversation on Best Buy. And with that said, we are now going to switch gears and get into the Q&A segment of this video with our first question coming from the Dividenders Discord server. My friend Spartan Tyler wants to know, question for anyone. I've got roughly $3K to start investing and I'm debating on a growth versus income portfolio approach. I know long-term I want to be more on the income side of things, but I'm worried if I start off on income with such a small amount invested, I would be missing out because my dividends would be so minuscule. Any help would be great. In my opinion, Tyler, if that is what is making you apprehensive to get into dividend investing, or if that's what's making you think it may not be the best strategy to start out with, I think it will be helpful for you to know that that's how every dividend investor starts out. You gotta start somewhere. I remember personally when I started out, I was getting like a dividend payment of 7 cents here, 10 cents there, maybe $1 here at most. You know, you really have to start from scratch at ground zero. And then you build it as time goes on. That's the thing with dividend investing. I've said this before, but dividend investing is a slow burn. It is something that you do over the long term, and it takes patience, it takes resilience, and it takes consistency. So sure, maybe starting out the dividend payments won't be super high, but number one, everyone starts out that way, like I said. Number two, you stick with it and you be consistent with investing. Start off with that 3K and then make additional consistent contributions as much as you can. Man, I guarantee you do that for 5 years. You do that for 10 years. You'll be surprised at the progress that you can make. And hopefully that answers your question, Tyler. Sorry if I rambled there a little bit, but hopefully that response helps you out a little bit, man. And now moving on to the second question, guys, this comes from my friend Kevin, who wants to know just a quick question or two. Would you change anything now knowing what you do know but didn't way back? Second is, do you use Robinhood exclusively as your brokerage investment tool? So I'm going to address the second question first. So I don't use Robinhood anymore. This comment was left on an older video of mine back when I was using Robinhood. But since then, Kevin, I have switched out of Robinhood and I transferred all my funds in there into my Charles Schwab account. All right, now I'll go back and address the first question here, which is really the main question in this comment. So would you change anything now knowing what you do know but didn't way back? basically here he's asking, with the information that you have now, with all the knowledge that you have now, which really isn't a whole lot, I still have so much to learn, but knowing what you know now, what would you do differently if you could go back and do it all over again, basically, right? One of the big ones that comes to mind, and it's funny, I was actually thinking about this a little bit earlier today, but when I first really started taking dividend investing seriously and wanted to get into it, the first handful of stocks that I invested in were solely based on what I saw other people buying here on YouTube. And obviously, guys, I have nothing against, these investing YouTube videos. They've been a huge help for me, and I hope watching them is a huge help for you too. And I have a ton of fun making these videos and sharing my experience with you guys. But without doing any other research, I would buy these stocks that I saw these other creators investing in that I really knew nothing about. A couple examples are like SPHD, which I sold out of that a long time ago, but I bought into SPHD, which is a monthly dividend paying ETF. I bought into Flower Foods, which I don't know if that's necessarily a bad company. Ticker symbol FLO if you guys want to look it up. And there's at least a handful of other stocks that I bought using that method. And it's just not the way to go about it. It really isn't. If you're going to be investing for the long term, if you're going to be doing this and taking control of your own portfolio and choosing your own stocks, it is definitely worth your while to try and learn more about how this stuff works and learn about analyzing stocks and learn how to research these companies. And once you learn the ropes and kind of get a grasp on how all this stuff works, it starts to become fun, and you really start to enjoy looking into these companies and learning more about them. You'd be amazed at the things you can learn just by learning how to analyze a business or analyze a company. I think there's so much crossover from doing this to other aspects of your lives. And really, I also think dividend investing can form some really good habits. I talk about this all the time. I just talked about it a few moments ago, but it takes patience, it takes resilience, it takes consistency and discipline. And those are qualities that if you have, can be a benefit to you in so many other areas of your life. With that said though, I did luck out and pick a few good stocks from, not doing research, like Coca-Cola. That was another one of the first dividend stocks I bought, and that's just a great company to own. Realty Income is another one. Knew nothing about it. Just saw it on a YouTube video and decided I needed to have it. But that's worked out for me well so far, and I'm glad that I have that in my portfolio. So Kevin, my friend, thank you for the great question. Hopefully that answers it. I really appreciate you asking that, and don't hesitate if you have any more questions. This is a lot of fun for me to do these Q&A segments. And with that said, guys, that pretty much wraps it up for today's video. Like always, we covered a lot of great ground today. And if you are still here with me at the end of this video, first of all, thank you so much. I really appreciate you taking the time to watch these. But also, if you have not done so already, don't forget to leave a like. Don't forget to leave a thumbs up on this video before you click on to the next one, okay? And also, leave me a comment below. What do you think about Best Buy? You guys like Best Buy? Are you passing on Best Buy? Are you kind of chewing on it? I'd be curious to hear your thoughts in the comments below, so leave one there for me. And last thing, guys, if you're not sick of me quite yet and you actually enjoyed watching this video, please hit that subscribe button for me. I'm trying to get to 6,000 subscribers by the end of the year. We're actually getting very close. I think we can do it, but I still need your help. So if you guys enjoyed watching this video and want to see more content from me, go ahead and hit that subscribe button. And with that said, my friends, I will now get out of your guys' hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.